This is a Shares for Beginners quick tip. Essential lessons. Questions answered.
Ethan Waddell is an investment analyst at Einhold Capital. In this quick tip, Ethan talks about the importance about doing your own research and what that research entails.
One thing that I've been thinking a lot about is the value of doing your own work. I have a lot of friends who have been asking me, what they should invest in if they don't want to do a lot of research. And
everyone wants a tip, don't they?
Yeah,
Everyone
exactly.
Wants a tip at the racetrack, yeah.
Well, and how to get away in particular with not reading financial reports.
Yes.
Investors need to be good at accounting. And, accounting is the language of finance. And if you don't speak the language, it's hard to get around. But more importantly, it's just critical that if you're going to invest in something, you need to put in the time, put in the effort, and really dig deep into whether something is worth your money. There are lots of good ways to make money in the stock market, but unfortunately, none of them are easy. So the best thing that I can recommend to anyone who doesn't have the time or doesn't have the energy or motivation to dig through 10Ks and 10Qs is just to invest in the S&P 500 index. You'll beat the majority of professional managers and you don't have to do anything. Just put your money there and leave it.
It is. That's one of the things I've been thumping the table about this for a long time, is just working out what kind of investor you are and whether you're actually going to be interested in reading financial statements and reports. And, some people really enjoy that and get off on it. But otherwise, just buy an ETF.
Absolutely. I really enjoy reading financial reports, and it's tremendously nerdy of me to be passionate about accounting, but it really is the way that you get to know a company and you get to know management and you get to know what's actually going on behind the scenes. And other than that, you don't have very much other than I like this, I'm going to buy it. And I think that even ETFs can sometimes be the same way. A lot of times ETFs are kind of marketing instruments by funds. They will create an ETF for something that's popular and trendy and that investors are excited about. But again, you have to look at the companies that's comprised of. You have to look at what you're actually holding, because just having a big collection of electric vehicles doesn't mean that you're going to be successful, even though, electric vehicles are probably going to take off. You have to know that the companies themselves are good companies that are worthy of your investment. And that takes homework and it takes time. And, it's not easy.
It isn't easy. That is a great insight. That's something that I've been discovering by doing this program, is that ETF providers are basically looking around for buzzwords on social media from which they then create ETFs, because it's a whole marketing exercise.
My favorite is the new ETF. It's literally called Buzz.
That's right, yeah.
It's a collection of all of the stuff that people are talking about on Reddit.
That's right. So apart from that, is there any other advice you've got for newbies, Ethan?
Oh, so much. Where do I start? I think one of the most important things is to think about investing in terms of compounding. Most of wealth building is a linear process. At your job, you probably make a relatively fixed sum of money, whether it's X dollars per hour, Y dollars per year. And it's just as difficult to make $10,000 if you have $5,000 in the bank as it is to make $10,000 if you have nothing saved up, or $20,000 saved up, or whatever. But with investing, it is just as easy, or perhaps just as difficult, to turn 5,000 into 10,000 as it is to turn 10,000 into 20,000. And over the long run, it's this exponential growth that really drives wealth creation beyond the virtue of just saving your cash. The earlier you start that, the more that compounding will work in your favor. And I think that is what really should be inspiring investors to invest, not to get rich quick, not to find the next $1 million idea, but the fact that if you have good ideas over a long period of time, your wealth grows exponentially.
And what about if someone starts feeling the same urges that you do and want to start reading financial statements? Where's a good place to start?
Oh, well, as evidenced by all of the books behind me, I think the best place to start is reading. Read your annual reports, but if you're not comfortable with that yet, there are so many books by great people who have done it successfully. I really like Joel Greenblatt. I like Peter Lynch. I like Warren Buffett's annual letters to shareholders. As far as psychology is concerned, I also really like Richard Thaler and anything written by Daniel Kahneman and Amos Tversky. They have a number of great books. The book Thinking Fast and Slow, in particular, is just a magnum opus on all of the ways that psychology impacts investing.
If you found this podcast helpful, please tell a friend, especially if it's someone who needs to start thinking about investing for their future. You'll be helping them and helping me to keep this show on the road.
Shares for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation.
And thank you for listening to my podcast.